Welcome, everyone. It's great to be with you this morning. My name's Helen Wayne, and I'm a Senior Manager in the Knowledge and Learning team at A4S. I'm excited to be here hosting our TNFD and Natural Capital Accounting webinar. It's a topic that's really rising up the agenda for a lot of organisations, so it'll be great to hear from our panellists on this important subject. Please note that we're recording the webinar for others, and it will be made available on the A4S YouTube channel later this month. There are 3 learning objectives for this webinar. After completing today's event, you'll be able to articulate the business benefits of integrating nature-related issues into risk management and disclosures, describe the steps to begin to integrate nature into reporting processes, including adoption of the recommendations of the Taskforce for nature-related financial disclosures, and translate the learnings of others, including how they're leveraging their learnings from other frameworks, such as the Taskforce for climate-related financial disclosures. Please note that throughout the session, we'll also be running a few poll questions, and you'll need to complete these in order to get your CPE points. The webinar will last around 1 hour. We're going to spend 10 minutes on an overview of TNFD and then head straight into a 30-minute panel discussion to understand the implications for finance teams. We'll then be spending the remaining time on a few polls, and there should also be some time for Q&A, so please do drop your questions into the chat function and we'll do our best to answer these. Before moving into the introduction, I just want to introduce the guests that were joining us today. We have Emily McKenzie, Technical Director at the Taskforce on Nature-Related Financial Disclosures, Ria Bakshi, Global Head of Sustainability Accounting, Reporting and Impact at Olam Food Ingredients, Luke McLaughlin, ESG Strategy Manager, and Becca Speed, Natural Capital Strategy Analyst at United Utilities, and Dr. Nina Seega, Director of the Centre for Sustainable Finance at Cambridge Institute for Sustainability Leadership. A warm welcome to you all. So for the first part of the session, we're going to be speaking with Emily McKenzie. We know that half of the world's economic output, or $44 trillion is highly or moderately dependent on nature, and that nature is deteriorating at an alarming pace. There's growing evidence that this poses risks for businesses, capital providers, wider economies, and that risks are increasing in severity and frequency. I'm delighted today to be joined by Emily McKenzie, Technical Director of the Taskforce on Nature-Related Financial Disclosures, to get her views on the importance of TNFD in the current reporting landscape. Emily has significant experience on integrating nature in policy, finance, economics, and decision-making. Prior to joining TNFD in November 21, she led the analytical team that produced the descriptive review on the economics of biodiversity, based at the UK Economics and Finance Ministry. She also seconded with the Capitals Coalition, helping to develop the Natural Capital Protocol and its technical group, and worked for a decade within the WWF Global Science team. So thank you so much for joining us today, Emily.
Pleasure. Great to be here.
So for the first question, how do you see TNFD playing a key role in supporting organisations understand their interactions with nature?
Thanks, Helen. You already set out very clearly why there's a strong case for action with nature deteriorating faster than at any time in human history. We also know the majority of the services on which business and society depend are in decline, and we're outside of the safe zone for 6 of the 9 planetary boundaries. These are these processes that are absolutely critical for the Earth to be in a stable, safe zone. And so with all of that backdrop of this rapid decline, we see growing evidence, some of which has come from their panelists today, that this is posing risks for businesses, for capital providers, for financial systems, and for economies. And that, as you said, these are increasing in severity and frequency. We also know the World Economic Forum showed that although environmental risks, climate included, are identified as the most significant risks, that leaders see them as being the risks we're the least prepared for. So that's where TNFD can help for organizations to begin to understand how they're interacting with nature. We set out not only disclosure recommendations like TCFD, and I'm sure we'll get into that in a moment, but also practical guidance for how you can identify and assess your interactions with nature, and through that build to managing, most importantly, taking decisions to manage those risks and to seize opportunities. And then, of course, also through to transparency and disclosure. So in a nutshell, the TNFD is established to set up those credible recommendations, detailed practical guidance, which has been developed through over 200 pilot tests. So really learning by doing in a practical way. So you can understand those interactions. And we talk about 4 types of interaction: impacts and dependencies on nature. So businesses depend on nature for a whole series of what we call ecosystem services, benefits like pollination, regulation of water supply, protection from hazards, through to just even extraction of resources, whether it be for crops or for timber. And but then they're also having impacts on the environment, and these 2 things interact powerfully. So you can have positive impacts, you can have negative impacts, but that will then affect the ability of the environment to continue to supply these services that the business and others are relying on. And so through those interactions, impacts and dependencies, it creates risks and opportunities. And the risks are similar sort of categories to climate, physical risks, and transition risks, which may arise if the organization is out of sync of the way the market and non-market forces are evolving, things like consumer preferences or investor and regulatory requirements, and systemic risks, because both ecosystems can have tipping points and thresholds. They don't behave in a linear way. They could crash and not be able to deliver those services. And we have financial systemic risks also. So, and of course, on the plus side, there are opportunities to benefit nature and to benefit the organization. So all of that, the impacts, the dependencies, creating the risks and opportunities, and the way the organization can respond to all of that by folding this into their governance, their strategy, their risk management processes, is the kind of essence of what the heart of the conceptual framework that the TNFD has laid out, hopefully in simple, practical terms, so organizations can get going and understand their interactions.
Great, thank you. Yeah, and it's really helpful to kind of have it set out in those different elements of terminology, which finance professionals can become a lot more familiar with. You mentioned a couple of the drivers there, but one of the pressures is investor pressure, reputational benefits of nature-related reporting, and you mentioned the kind of start of the regulatory reporting requirements, such as inclusion in the European reporting sustainability reporting standards. I also thought it's important to mention that at COP15, governments agreed to ensure that all large companies assess and disclose risks, impacts, dependencies on nature by 2030 as part of the global biodiversity framework. So TNFD, I expect, will become a much more kind of key element of reporting over the next few years.
Absolutely, yes. So the global biodiversity framework, which was agreed by almost 200 countries back in December last year, enabled us to see clearly what those global goals will be, almost like the equivalent of the Paris Agreement, the goals and targets. And importantly, target 15 of the GBF sets out that countries should enable assessment and disclosure of risks, impacts and dependencies. And so the TNFD framework is a really practical way for then countries to implement this and organizations to get going. So there's a really nice alignment. So it's that sort of cascade from the highest global goals and targets established by governments around the world, flowing through then to the actions that organizations can take to contribute to the achievement of those.
Yeah, thank you. And you mentioned the kind of governance strategy, risk management metrics and targets, which I'm sure a lot of companies will be familiar with. But could you give us a kind of broad overview of TNFD and especially its alignment with TCFD, which a lot of companies will kind of be much more kind of familiar with the overall kind of pillars for reporting?
Yeah, absolutely. So the TNFD has taken its inspiration and its approach from the TCFD. So the acronyms are similar, the approach is similar. We've built on what they've established and is widely acknowledged to be a very useful framework. And like them, we're a market-led initiative. So we have a market-led task force that have been driving the development. We're also globally applicable and very strongly based in the science through our work with our knowledge partners and supported by the government, including the G7 and G20. So we're like TCFD, a market-led initiative. And when you get, as you mentioned, into the heart of our framework, we've been very consistent with the language and structure of the TCFD. And of course, now also the International Sustainability Standards Board, which is developing that global sustainability reporting baseline and has folded in the TCFD within it. So TCFD, I'm sure all of your listeners will know, has these 4 pillars of governance, strategy, risk management, and metrics and targets, as do now the ISSB's IFRS standards. And we have built on those same 4 pillars. We've taken the 11 TCFD recommended disclosures and done the sort of adjustments as needed to carry them over to be relevant for nature. And then we've only added additional recommended disclosures. There were 3 additional ones where there was a very strong logic for doing so because of the nature of nature. So they touch on the importance of engagement with affected stakeholders and Indigenous peoples and local communities, because nature is very locally based, and that can be very important for understanding those impacts, dependencies, risks, and opportunities. The interface with sensitive locations. So again, because many of these things happen in particular locations, as opposed to greenhouse gas emissions, where it doesn't matter where it happens, has the same impact. We also have a disclosure which will enable that transparency of where you're interacting with particularly sensitive locations and where your material impacts and dependencies are happening. And value chains. So actually TCFD did have coverage of in climate scope 1, scope 2, and scope 3. We break that down into direct operations and then split out a disclosure on upstream and downstream, because we know that can be very important for some sectors, but also quite challenging for the assessment. So we've split that out into 2. And then the only other thing I'd maybe highlight in the detail is, unlike TCFD, we also set out general requirements, which we are not a standard, we're a framework and a set of recommendations, but we did think it was useful to set out some general requirements, because that would help to create consistency in the information disclosed. So they build on the ISSB's general requirements, but they look at things that will enable that consistency, so investors can make sure if they're seeing TNFD aligned reporting that they're following a consistent approach. And they touch on things like, what's your definition of materiality, what's the scope of your disclosures, what time horizons have you considered, and things like that.
Fantastic, thank you for a really useful overview, and it's great to kind of hear that alignment and the comparability between different organizations.
Yeah, hopefully, I mean, that's been very warmly received and encouraged, right? Because it enables people. We know that many market participants are familiar with TCFD, and they've built those teams, they've built that expertise, and they've got some experience with that kind of assessment and reporting, and it's created a language system. So it's been, I think, very helpful for people that we've started with TCFD and are extending from it. And then, of course, people have in mind the ISSB and GRI as the standards. So knowing that our structure is consistent with the emerging standards also helps, because that's the trajectory, as well as you mentioned the European regulations. Of course, there's also informing and supporting those who are applying regulations, and in the European jurisdiction, those regulations have been happening in parallel. I don't think TCFD ever had that with TNFD's framework development. So we've worked very closely with the European authority, the EFRAG, to share knowledge, share experience. So actually, the ESRS, those European Sustainability Reporting Standards, signpost and encourage organisations to use the TNFD guidance, the LEAP approach, and so on. Our conceptual framework is very consistent, and that's again done by design, with the jurisdiction that's been first out of the gate and moving the fastest by developing the regulation. So we see even in the regulation space that being very complementary.
Fantastic, thank you. Kind of touched on my question about kind of how the sustainability landscape looks, but if you had a crystal ball, where could you kind of see TNFD going in terms of kind of the global emerging frameworks?
We often get asked for a crystal ball, and I'm sorry to say we don't have one, but I guess the way we're just inspired, I guess, in learning from the TCFD's experience. So based on that experience, we see there will probably be 3 paths, and we've started to talk about that, by which the TNFD's recommendations will start to shift corporate reporting and, importantly, corporate risk management and decision-making. The first would be those organisations that are already starting to adopt them on a voluntary basis. And because we have those 200 pilot tests, including 240 organisations, that's they've been working for 2 years now to already apply it. So in many ways, that's already well underway. We already have TNFD disclosures. We have many examples of really enlightening assessments. We have TCFD and TNFD integrated disclosures coming out. So that's already well underway. Second, as I alluded to, informing further standards development, such as those of GRI. So we've worked closely with GRI on the update of their biodiversity standard, and we working closely with ISSB. They're obviously going through their agenda setting consultation to see what should be the next standards developments for them. But as and when they're ready to look at nature and biodiversity, we stand ready to support them. And they have already acknowledged their high level of consistency and their intention to draw on TNFD's work. So there's voluntary adoption, level 1, informing the standards, the global standards, level 2, and then there's informing regulatory developments that will be led by and decided by regulators in the different jurisdictions. And I guess our sense is that it can happen quicker than it did with TCFD. Quite a few commentators have observed that that's likely, partly because TNFD has sort of been such a powerful open innovation approach involving so many thousands of organizations and people, so it's well underway, but also with thanks to TCFD and all that they built, because we can build on those strong foundations. So I think there'll be those 3 routes of uptake, and I think it will happen faster than it did for climate. And that's with all recognition that nature is a more complicated topic, but actually we've had decades of great work, including Nina on the call and many other organizations, that we've been able to integrate their great work. So TNFD hasn't started from scratch. We haven't reinvented the wheel. We've been able to draw on things like the Natural Capital Protocol that you mentioned in my introduction, like the work of the Science Based Targets Network that's developing target methodologies, like the UN Statistical Standards for Ecosystem Accounting. It's been all of that great work that we've integrated and created into one sort of consolidated, consistent framework. And that's helped us move at pace, and it should help the rest of the world now move quickly, even though it's a more complicated topic.
Great, thank you. It's definitely the alignment and all the kind of bringing everything together is such a great methodology, and it's fantastic for the corporates who are going to be adopting TNFD. So for the next part of the session, we're going to be moving on to a panel discussion, and I'm really excited to introduce our panelists today. So if I could ask Ria, Luke, Becca, and Nina to come on screen. And to introduce our panelists, we have Ria Bakshi, Global Head of Sustainability Accounting Reporting and Impact at Olam Food Ingredients. Ria leads the Finance for Sustainability Department at Olam Food Ingredients. Her role involves leading multiple sustainability reporting and rating requirements such as TCFD, GRI, and bringing the rigor and expertise of finance to sustainability data governance. She's been leading the pioneering work on natural, social, and human capital impact valuation under OFI's integrated impact statement, and leads work streams on embedding ESG within decision-making processes. We're also joined by Luke McLaughlin and Becca Speed from United Utilities. Luke is ESG Strategy Manager, a chartered accountant who has worked in sustainability for a number of years and who leads on value-based decision-making. He's been involved in the development of the integrated annual report at United Utilities, which includes TCFD and TNFD disclosures. Becca Speed is a natural capital strategy analyst and leads United Utilities' approach to natural capital accounting, including the development of the regional and corporate level capitals accounts, the Natural Capital Working Group, and the United Utilities TNFD disclosures. And Dr. Nina Seega is Director of the Centre for Sustainable Finance at Cambridge Institute for Sustainability Leadership. Her role involves helping to mainstream environmental and social considerations into daily financial and corporate decision-making. She's Sustainable Finance Advisor and Board Director to central banks, academic bodies, as well as commercial, corporate, and financial institutions. It's really great to be joined by all of you today, and a warm welcome to you all. So firstly, Nina, I'd like to turn to you, because you will have seen a range of organisations adopting and implementing TNFD. What do you see as the benefits of being an early adopter in the move to integrate nature into risk management strategy and disclosure?
Thanks, Helen, for the question. It's a pleasure to be here this morning. I think there is a multitude. I mean, we've been working with organizations over the past 4 years in thinking through how to bring nature into their risk management processes and into their daily financial decision making. And there are a number of things that they get from it. Number one is they have a much better understanding of the risks in their portfolio, much better understanding of where their dependencies lie. And that means a much better understanding of what their clients are doing and not doing in that space. And that can foster better relationships with clients, that can also foster not only risk-driven processes, but an opportunity to look at more the opportunity side of things. So to provide potentially financial products that will help their clients, to think through solutions, to lead some interesting work in how we can start mitigating the impact, corporate impact, and financial impact on nature. So this possibility, this opportunity to be at the forefront of the process of integrating nature brings benefits both on the risk side as well as on the opportunity side.
Great, thank you. And yeah, you mentioned a few kind of key elements, especially for finance teams there, and for our audience who's kind of mainly finance professionals. There's a lot of areas where finance teams can really play a key role, like ensuring the quality and reliability of data and information to support that decision making and target setting, developing good quality management information systems to support the financial and non-financial analysis, integrating nature into financial processes such as budgeting, capital allocation, and investment decisions, and integrating nature into the wide risk management, as you kind of alluded to. So if we move to our corporate representatives, I'd love to ask Ria, you've been really instrumental in developing Olam Food Ingredients Integrated Impact Statement. What's been your organization's journey on nature-related reporting and disclosure?
Hi, everyone. Thank you, Helen and Ephorus, for inviting me. So for Olam, I think the nature-related reporting started with, of course, we do our integrated sustainability reporting, but very great focus we put on the natural capital accounting. So the natural capital accounting, where we looked at really our, what we're talking about right now, our nature-related impacts and opportunities, our dependencies and risk. This was sometimes 4 or 5 years ago when we started integrated impact statement. And we started looking at impacts such as societal cost of carbon, or let's say the shadow price of water, cost of water pollution, all that cost of inaction, and then also getting ecosystem services cost, what is the biodiversity cost, and all this into picture. This is where it all started. And of course, as I said, we are already doing our integrated sustainability reporting based on GRI standards, and it already has our biodiversity, some of the metrics. So this is where we all started 4 years down the line, and GRI, as we know, more impact focused. What's our impact on let's say on the ecosystems, on the way we are working, and what is our impact because on the ground because of our activities. And now, slowly as we are moving more from impact to more of a risk perspective, and I think that's the change which I'm seeing right now. So right now, when we are doing our natural capital accounting, looking at the cost of inaction, the impact, the externality cost. But now with new emerging frameworks, particularly like TNFD, and how we really trying to inculcate and incorporate it within our businesses, now taking nature, of course, impact perspective is also there, but more from a risk perspective. And also ensuring that when we look at, this is one of our material area, ecosystem and biodiversity, we don't just look at it more on impact, but give a larger picture, like how the governance, the strategy, the metrics, the target, the risk, and complete the picture so that you are able to better embed it within our decision making and all. So I think that's where it is going on. And now we are working on few of these things. But I think more importantly, Helen, I think the fundamental thing that I think is important is not to look into all these reporting and disclosures as an obligation, but I think we are, with some new things coming up, we look at as an opportunity to relook and revamp the way we are doing things, ensuring that it's not just the end of the cycle reporting or something, but ensuring that we have the right frameworks in place and we have the right knowledge in place so that we can inculcate all these things into better decision making. So that's the journey. Thanks.
Great, thank you. And I love hearing kind of developing frameworks being referred to as opportunities, because we see them as exactly that. They're just useful tools to be able to help organizations really kind of understand risks and opportunities and make the organization better, more resilient. Becca, you've led on United Utilities' approach to natural capital accounting and TNFD. It'd be really great to hear kind of your organization's journey along this kind of path.
Yeah, so with United Utilities, the nature of the company being water and wastewater provider and water for the Northwest. Our natural capital journey first started and considering nature in our decision making first started in the early 2000s, but it was only in 2018 where we first started looking at our corporate natural capital account. This was an internal report, and we didn't really produce any external material on this, but then we realized from learning from that experience of the corporate account, we then looked at our impact on nature in the wider environment. So then we produced our regional natural capital account, which also not only looked at our lands that we owned, we looked at land from other organizations where we interacted with that land. And then recently, so this year, we have updated our corporate account for land that we own. So this is the second iteration of that 2018 account, and our CFO is really keen to produce this externally. So we are this month we are in the development of producing this account report to present to external stakeholders. So that's really exciting news coming from our corporate accounting. And then in 2022, when the TNFD first started to develop, we were really keen to get on board with this. So we have been engaged in the whole process of the recommendations, and we produced our first TNFD disclosures last year. It was a very high level looking at the TNFD nature-related disclosures, but using the TCFD, which we have quite a lot of experience on. So using our lessons learned from the TCFD to produce our first TNFD report last year. And then this year, we produced our first integrated report. So rather than treating climate and nature separately, we have integrated them together we've integrated our report this year to show how important it is to consider both nature and climate together. And next year we have committed to becoming early adopters of the TNFD as well. So we will continue on our TNFD reporting and continue to develop on the maturity of that TNFD as we did with the TCFD. I think it's really important learning from our colleagues who produced the TCFD documents for United Utilities, because they have been through this process before. So it's really important to learn where they see their opportunities in the reporting.
Great, thank you. And yeah, really interesting kind of combining the approaches and learning from those who are kind of looking at TCFD as well. Ria, we heard from Becca, who kind of shared her experience on looking at TCFD and working with colleagues who've kind of worked on those kind of disclosures. But what's been your experience on how have you leveraged kind of that experience of TCFD in particular, but also other frameworks?
Yeah, I think so reporting is like we are doing, of course, on TCFD, GRI, SASB, few others, and looking at consolidations. But I think the interesting learning, I think what I would say is really how we look into data. So with climate, I would say more or less data was like GHG emissions, something very we have been doing, and it comes relatively easy. But nature, as we are hearing, is a more complex topic. And with TCFD, we know, okay, what we have to look at the different scenarios and understanding the risk and opportunities, and how much capex or how much revenue associated with our climate transition and everything. But now really looking at that time, like, if we need to mirror something for our nature related, and if you see the metrics also in the TNFD framework, the core metrics, it really, I think it comes out from the TCFD framework, the entire structure and everything. And now we have to see a lens which is from a nature perspective, by the same time, nature and climate together, giving a more integrated approach. So I think the learnings of TCFD is really, the first sense is on the data and on the nature of data. So first for climate, okay, emissions coming more easily, we're understanding the measurement and everything is there. But nature, again, trying to understand from a biodiversity and ecosystem perspective, what are those metrics and how we will be how we'll put these metrics into our enterprise risk management, for example, or really looking into our capex decision making or in our M&As, how we will be putting these nature related metrics. So I think that's something learning that we got from GRI and TCFD, so that we can enable. And now when we will be doing a pilot, which we are proposing a pilot on TNFD, the important thing is, which we are is saying that, of course, from an impact perspective, we see, okay, this is our impact and we have few metrics, but also we need metrics from a risk perspective, the risk towards on the business. And whatever we have been doing, because as I said, reporting is something that happens, but we need to make that as an opportunity to really revamp and relook how we are doing all this, whether we have the right governance, whether we have the right strategy. Are we really building nature like we did with the climate? Are we building nature within our business decision-making processes? So I think that's the key element here, and that we should keep our focus on. So nature, otherwise, some of the challenges that we feel is, that nature, what nature, how do you define nature? What are ecosystem services and everything? So really bringing it a more sectoral perspective, coming from an agriculture, food company perspective, that where are these things, whether it's soil health, whether it's deforestation, whether it's water scarcity, what is it that will pose a risk from a nature perspective? So I think getting that risk perspective is something which is important and that we have learned on. And overall, as I said, I think it's important to build all these things like the TCFD started with into your decision making and processes. And that's what I hope with nature also, we will be able to do it in a more systematic way.
Yeah, great, thank you. And it's interesting to hear kind of that shift about from the impact perspective, but then looking at the risk and kind of understanding the impacts to your own business. And you kind of led me nicely on to the next question for Luke, because you're kind of the ESG strategy manager at United Utilities and have been quite involved with decision making. And what's your what do you see as the main role of finance in this area, and also the kind of impact on decision making for corporates?
Mm-hmm. So I suppose for me, there's kind of three elements that I've seen finance have been really key in leading the change that we need to see more nature reporting sort of embedded and more decisions based on nature related information. Becca already alluded to the fact that our CFO is really bought in. I guess he goes out there and he sees the drive from the investor community, the drive from others to really be a lot more transparent on our impacts and dependencies on nature. And that's really flowed through into his team and I guess to teams outside his team, like our own team. And it's really that collaborative effort between ourselves and the finance team in that respect. The second element, I think, is around kind of investor relations. So the investor relations team hold the pen on our annual reporting, and they've really taken it upon themselves to, I guess, build on the alignment of TCFD, the alignment of TNFD, and the kind of upcoming ISSB, to really structure our the front end of our annual report around the four pillars of the TCFD. So I think that's been really nice to see them leading that element, really being able to communicate it in a proper way. Thirdly, then, kind of the decision-making angle. So I've been part of a working group internally where the finance team have really been supporting on capital allocation for our upcoming business plan. Natural capital measures have been at the heart of that process. So it's been interesting and quite collaborative for me to bring more natural capital measures into that process than there have been ever before. And it's been really interesting to see the type of decisions that are coming out of it, the type of discussions and really that decision-making forum that are being presented with more information on this stuff than they ever have before. That's led to kind of, well, a business plan that is made up of different choices than we may have made earlier. So really that collaborative effort of the kind of cost benefit analysis working group has been really nice to see. And there's one example that kind of manifests itself, or that comes to mind when I'm thinking of this, was around a nature-based solution that we've implemented up in one of our treatment works up in the Lake District at a place called Southwaite. Like under traditional decision-making processes, we probably would have gone down the cheap and short-term concrete-based solution by broadening the net and broadening that definition of benefits that the investment gives us. We've been able to sort of make that business case for a nature-based solution there. So we've started construction on a treatment wetland, which both does what we need it to do from a business perspective, but also sort of brings those biodiversity benefits, the sequestration benefits, and those wider benefits that we're really looking to get as well.
Fantastic. And yeah, it's really interesting to see how kind of decision making is shifting, bringing into kind of these longer term value creation elements rather than kind of the looking at kind of just the financial elements of decision making. Nina, we've heard from quite a few of the participants now around how kind of corporates are changing, the reporting is changing, risk management is kind of changing. How do you see the landscape of nature-related reporting and accounting and disclosure evolving in the future?
I mean, I think it's been really an interesting conversation so far, and I really liked this idea of using reporting as an opportunity to rethink the way decisions are made. So, and then getting the reporting right as a byproduct of it effectively, rather than driving the reporting for reporting's sake, which effectively is an unnecessary cost. Whereas if you see it really as bringing it into the business, bringing it into decision making, that changes the way you think, that allows you to make better decisions, to make decisions that better reflect how organizations, how companies are embedded in our environment, embedded in our social systems, in our natural systems. So I think that's an important part of it. I think another one is this thinking through the intersection between climate and nature. And there, it's obviously within the TNFD, climate change is one of the drivers of nature loss. So it is naturally predisposed to think through climate and nature in a single system. And we've been doing some work on how you can start engaging with clients on the intersection between climate and nature. So when you're having conversations with clients already on climate, how you can bring nature into that conversation. And again, thinking through the fact that, not being afraid of seeing nature as this really big complex thing, but breaking it down to the things that you're already talking to clients maybe about, things like water, things like soil, things like biodiversity. So things that are already within your system. And I guess if I look ahead and think how the reporting and disclosure landscape is changing. I'll come back to kind of what Emily said in terms of TNFD already kind of going down on very fertile soil. So we have systems, we have regulations, corporates and financiers know how to do TCFD, and TNFD is an evolution on that. But ultimately, I think what all of us would like to see is an integrated reporting of all of the environmental and social considerations that are financially material to businesses, to financiers, and that include issues like climate, like nature, but it also includes issues like social. So ultimately, you don't want to see 5 different task forces thinking through different things. You want to see a single integrated report of everything that influences the way firms are embedded in their world and the way they make money, the way they interact with their customers and with their clients, and bringing that into the core of financial decisions. And I think a TNFD is an absolutely fantastic step in that direction.
Thank you. Yeah, really valuable comments there, and definitely that kind of bringing it into the business and not focusing on the kind of reporting element, which I think is really valuable advice for our participants. Before we move on to the next session, I'd like to just go around the room and ask you what would your key recommendations be to our participants who are at the beginning of their journey with natural capital accounting or TNFD? And perhaps we could start with Ria.
Yeah, I think the key is always to keep it simple, because nature is something already complex, but we need to really make it and bring it back to our business and make it real and make it effective, rather than making it okay, biodiversity and nature, like I'm saying, the challenges we face internally. So if we start small, like with the TNFD, understanding the risk for different business units, which will be different for different regions, nature is different, when it comes to, let's say in our case, just to give an example to the participants, the way we deal with nature related risk for almonds or nuts will be different for different locations, and for coffee will be different. So just start small, look at where are your, where you can start to build this journey, and make sure that you're able to come up with a messaging which is very strong. And when you start small with a strong message, I think you will be able to scale up and influence more people into your organization to really bring nature into decision making, and making it more effective then ultimately for reporting.
Thank you. Yeah, so start small and don't get kind of overwhelmed, I suppose, with the detail of the complexity behind TNFD. Becca, could you give us a kind of few words for the participants?
Yeah, I think so. I think upskilling our colleagues is definitely a key thing that we're noticing. So something that we're starting to do in United Utilities is we have an e-learning module for our colleagues to learn more about natural capital, and this will eventually expand to the 6 capitals. And I personally go around to my colleagues who are trying to learn more about natural capital, and then I will teach them how to incorporate that into their decision making. So I think it is important for people to make decisions. They need to upskill on what they're making decisions on, and to fully incorporate nature into their decision making. They need to upskill on seeing what the benefits they can from something like Luke mentioned earlier, not going with the conventional grey tank solution, and seeing what else is out there. See what is available.
Great, thank you. So upskilling is key and integrating into decision making. Luke.
Yeah, I guess for both ourselves and for OFI, there's quite a direct link straight to nature. So it doesn't take long before you can kind of tie those things. For us, it's catchment land is really really important in terms of the condition, and that really leads us down a particular path. I guess for most of the businesses, they are equally as dependent on nature, but that link is not one link in the chain. It might be multiple links in the chain. So for me, I think the easiest way to start is almost that desktop exercise of where are the dependencies and where are the risks, like kind of taking that systems view. And I guess using that picture of how your business interacts with nature and how it depends on nature as the basis for your internal business case and internal engagement. I think that would really start bringing it to home, so it becomes bringing it home for people that it's not just this big unmanageable issue, but that actually there are really quite specific risks and opportunities related to nature that can be managed.
Great, thank you. So that kind of holistic view, looking at your kind of impacts and dependencies along the value chain. Nina, final words for our participants.
I'm going to build on Luke's because he's, sneakily stolen mine. But if you haven't done anything, do a portfolio review. And there are wonderful tools out there, depending on how much data you have on your value chain. So if you don't know locations of your value chain, you can use Encore, and there are examples that we've done that show you how to do that, to understand the dependencies in your portfolio. If you do have location data, there's a WWF risk tool, biodiversity risk filter, that allows you to do the same. But the idea is you see the biggest dependency, and that's the thing's going to hit you, and that allows you then to start making really interesting kind of more detailed analysis on where you can decrease the impact and how you can move forward with it.
Fantastic, thank you. Really good to hear this kind of new terminology, which I'm sure is going to get very finance teams are going to be getting very up to speed with it over the next few years. Thank you so much for our panel and discussion today. It was a really interesting discussion. We're now going to move on to a Q&A with the audience. So Emily, if I could ask you to come back on screen as well, I'll be kind of directing a few questions at the different participants. So a question for Luke and Becca. What challenges have you seen when integrating nature into risk management strategy and reporting?
I'll take that one. So I think for me, it's quite easy or relatively easy to look at the really short-term, immediate risks and opportunities. So I've already mentioned like a catchment land example for us. So the water falls on land, it goes into our reservoirs, we treat it and deliver it to customers. If the land is better quality, if there is a rich sort of, you know, if there's a great habitat there, that really helps the whole process. And those are the sorts of risks that are a no-brainer. It's really easy to build those in. I think the challenge is more around the kind of existential cliff edge type biodiversity loss risks. They're just so big that it's really difficult for one organization to manage on their own, hence our kind of exploration with a regional natural capital account and really trying to work in partnership with others. So I think it is that shift from short-term, small, manageable nature-related risks all the way through to these big existential type risks that's been really hard to build in.
Yeah, great, thank you. And that collaborative effort, I think, is a really important one, because this is similar to climate. It's not kind of a problem that you can solve on your own, and it's that collaborative approach is a really important one. How about RIA? So the integrating question again. So around risk management, have you seen any challenges in integrating nature into your risk management processes, or thinking about it in a different way?
So I think the challenge, of course, one of the greatest risks that we see is any kind of deforestation happening in our own farms or in the supply chain. So that's one thing, and we have that. But when it comes to also including biodiversity related or ecosystem related metrics, I think the challenge is where and how frequently and quarterly we need to really assess these risks. First of all, what are those metrics? And really differentiating a bit with the impact work that we do, which is we try to increase the positive impact on the ground, but also understanding from a risk perspective, because we are talking about enterprise risk management, what do we need to assess, and bringing the right metrics and getting the right data at right frequency. This is a challenge, but I think this is where the companies and everyone, I think, needs to go towards. And that's how we will really make it, integrate nature into the business planning model, strategy, and everything. And I think that's one of the challenge we are seeing right now, to identify the right metrics and how we can get on a quarterly basis the right data from different BUs, business units for different regions, and really bringing out materiality concept also, that what is material for different business units and all from a nature risk perspective, and bringing that into our ERM. And when it comes to risk, we don't see nature as a nature risk. When we do our, we have operational risk, legal risk, compliance risk, nature needs to be embedded in those risks. So for example, if next 5 to 10 years, if we need to, build up or look into some kind of an investment or grow our sourcing origins and all, then we need to, whatever are your conventional risk, technology risk and all that, also bring an element, like we do for climate, bring an element of nature in that as well. And then you will be able to really bringing it within those risk categories itself, rather than showing nature risk separately. Because just like we know carbon tax and carbon, all that is coming up, the technology risk when it comes to carbon transition and everything. So that's how it's all bridging in with the enterprise risk management. Similar approach with nature needs to be taken, but I know it will take time. There are some metrics that needs to be, we need to really cater to understand where the data will come from. But that's the challenge. But at the same time, I think this is the opportunity and where we can bring more resilience to our business.
Thank you. We've heard a bit about the kind of sensitivities of ecosystems. I wonder if Nina, you could kind of talk around how that's, or why that's important for people to understand, and how they're kind of interacting with the different ecosystems in different areas.
That's a really good question. And actually, I think there's a lot of confusion on the ecosystem side, because it feels like, to a lot of at least corporate and financial institutions, it feels like something entirely external. Whereas if you think about ecosystem services, it's our day-to-day provisioning services. It's the water, it's the fiber, it's the, if you think about mangroves, protecting our coastlines, effectively, that's what stops you from having coastline flooding. So it brings down your insurance risks, your underwriting risk along those planes. So I think effectively, we have examples, and I just saw another question in the thing about how do financial institutions think about nature-related risk. So we have examples of flows where you look at the loss of an ecosystem service, and then you trace the loss of that ecosystem services via transmission channels onto effect on corporates, onto impact on corporates, and through that into credit risk, market risk, operational risk, business risk, legal risks that financial firms have. And we have examples of how those risks are already financially material within current portfolio. So we've done a piece of work with HSBC on a portfolio of 50 heavy industry clients within East Asia, and looked at a very realistic water stress scenario. And what we saw is that almost the entire portfolio gets downgraded by at least a notch. And actually a large part of that portfolio goes from investment grade to junk. So again, you see the loss of a particular ecosystem service, which is provision of water, into very core financial materiality that every financial institution is sitting on and that most corporates are sitting on. So I think that's kind of the micro prudential filter. But there is, I think that maybe the point you were trying to make here is also the bigger interconnected filter, or thinking through how are there tipping points that were hit, in which case what we will see is a number of financial firms, a number of corporates getting hit at the same time. And that's effectively what all of us are working here trying to prevent, because at that point, we're looking at a very disruptive transition to how we do business, which is by starting to put nature and climate into our decision-making. We're trying to ensure that we manage the transition to a much more nature positive and much more climate neutral activities.
Great, thank you. Really useful response there, really interesting. We've got a question from Justin in the panel, maybe for Emily. How do you foresee, or do you foresee any challenges with explaining TNFD disclosure impacts in the financial statements?
Thanks, Justin. Yeah, I'm trying to understand the question clearly. So I guess in my way of interpreting your question, when we have disclosures, the different recommended disclosures cover the different concepts I outlined. So impacts, dependencies, risks, and opportunities, the response of the organization. So how are they then adjusting their governance, their strategy, and their risk management, and folding that into their risk management processes, which the panelists have given brilliant examples of. And in some of those, there are specific metrics laid out in response to RIA, specific recommended indicators and metrics for impacts, dependencies, risks, and opportunities, and the responses to them. So all of that provides, I think, the granularity that can then be used for disclosure. But your question specifically asking about financial statements. So I think what we are encouraging as ISSB is doing is integration into the financial statement package. But we're aware that, of course, that doesn't mean everything is going to be done in dollars or pounds or euros immediately. We have laid out some guidance building on the protocol of how you can do valuation. And it's really inspiring to hear from Luke and Rebecca about the use of natural capital accounts, because we see the potential for natural capital accounts to be useful, both the national natural capital accounts and the corporate accounts that United Utilities and others are developing, as a source of regular information and data they can use. And sometimes they go all the way from biophysical indicators like the water flow, all the way to what would be the financial implication, the risk to the organization in terms of those risks that Nina just outlined, the categories of which we're fully aligned with. So that then would start to get into financial indicators and metrics. So I hope I'm answering your question. I think it's all laid out, but I think some of the challenges will come at getting into monetary valuation. We have some pilot testers who've gone all that way and found it to be very valuable. United Utilities is a great example. There are a few others using natural capital accounts. Olam, indeed, has done pioneering work in that space. But it's more at the front end. So I think when Helen, you asked about where do I see the trajectory sort of 10 years from now, I think an area of really important innovation will be using these accounts, not only one-off assessments, but regularly updated accounts, to be able to make these sorts of disclosures on an ongoing basis, and to get increasingly sophisticated using your own internal information and external information to do so sort of regular, credible, reliable way. I hope I've answered Justin's question.
Thank you so much for your responses, and thank you everybody for your valuable input. It's been a really fantastic discussion today. If you're interested in finding out more about the topic, then there's a lot of information about what finance teams need to know on TNFD, top tips for getting started for both finance teams and pension chairs and trustees, and a maturity map on the A4S website. There's also an A4S essential guide on natural and social capital accounting, as well as some case studies, and links for these are all being shared into the chat. We're just going to have 2 very quick poll questions before we close. So what should you do to get started with nature reporting, including TNFD? Should you consider climate and nature separately? Upskill your team on the language of nature? Get help and engage with other organisations on the same journey? Seek to do all of the recommended disclosures at once? Or learn from your work on other sustainability reporting, such as the TCFD framework? So questions or number 2, 3, and 5 are all correct, as you've heard from the panelists today. So considering climate and nature together is a really important area, rather than considering them separate issues. And appreciating the interconnectedness between climate and nature will help you to identify common risks, opportunities, and solutions, and provide more holistic and meaningful disclosures. We recommend that you start with a few key areas and look for quick wins. Focus initially on one or two of the most material from TNFD's suggested core metrics, or on key locations. And finally, for our final poll, based on your experiences today, how likely are you to recommend A4S Sustainability in Action webinars to a colleague or peer? 1 being not likely and 10 being highly likely. And I'll leave that poll up, and just want to say a final thank you to our panelists, and thank you so much for joining our webinar today. It's been great to hear from everybody, and I hope you all have a great rest of the day.